Hi, I'm Phil Grande of philsgang.com. You know, we're told every day that the stock market is a good place to invest. And it is, if you know what you're doing. The last thing you do is take money and invest it with a planner, a money manager, put it in a 401k. It can't grow because the fees kill you. They really do. Join my gang, philsgang.com, and then you take control of your own retirement. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. What is Phil's Gang? Phil'sGang.com is a subscription website service that host Phil Grande has been teaching and providing daily stock investment recommendations for over 15 years, all in the name of making its customers educated investors and helping the kids at St. Jude's Children's Hospital. If you want to take charge of your financial future, then do not wait any longer. For only $49.95, become a Phil's Gang member today. Go to Phil'sGang.com or call 877-600-GANG. That's 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You ever notice they always tell you to buy, but they never tell you to sell? They never tell you to sell. Well, I'm going to help you. I'm going to help you understand. When you buy a stock, and if all you do is buy, and you never sell short to make money where they're going down, you have to be so good. That means you got to buy the companies that are always going up. Nobody's that good. Nobody could possibly be that good. You got to make money just like you make money when you buy a stock. You got to make money when a stock goes down. That's how you even the playing field. That's how professionals make money. They make money going up and make money going down. But they don't tell you that. They just want you to try to make money going up. They don't want you to make money going down because they make that money on you. Join my gang, Phil's Gang. Learn how to short stocks at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything will be taken care of.
We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
Do you think gold is money?
No.
Gold's not money? You got to be kidding. That's Ron Paul asking Ben Bernanke. And of course, Ben Bernanke lied. Of course, gold is money. But here's what he doesn't want you to know. They've been suppressing gold, trying to push gold down because it competes with the dollar. The Federal Reserve doesn't sell gold. They sell dollars. Gold competes. Gold will dictate in a free market where interest rates should be. That's the last thing they want because they manipulate interest rates. Now, has your broker told you that? Has your planner told you that? No. Well, I told my gang that. I explained it to them, and we positioned ourselves to be in a perfect position for gold and copper as it dropped. That's why you want to join my gang, Phil's Gang. We're right on top of this. philsgang.com. Join today. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
AMVA, and I've lost over 30K on it, but it had excellent earnings the last several quarters, and if they make the cameras and drone equipment, I don't know why it's so weak these days.
It's so weak these days because you don't pay attention to what they make. You don't care about their earnings. The problem is the institutions are pulling their money out, and that's all you need to know, and that's what we identify in the chart, and that's why I become a Phil's Gang member.
Go to philsgang.com or give us a call at 877-600-4264.
Generally agree that monetary policy was not the main reason for the housing bubble.
What are you, nuts? Of course monetary policy was the reason for the housing bubble. That's Ben Bernanke. Hi, I'm Phil Grande, philsgang.com. He's lying. Listen to this. In December 2000, interest rates were 6.5%. Within the next 30 months, Bernanke dropped them down to 1%. Because of that, mortgage originations grew from 1.5 trillion to 5 trillion. That was by the end of 2003. The housing bubble was inflated, and it was continued being fueled by his policies, which eventually we saw mortgages that grew from 28 trillion mortgage to 50 trillion. He lied. But here's the important thing. We were able to take advantage of that here at Phil's Gang, and we were able to make money because of it. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande of philsgang.com. You know, everybody, the hot stocks Apple or Google, whatever it is, it doesn't matter. What people don't understand is every stock is the same. If the institutions buy it, it goes up. If they don't, it goes down. It doesn't matter the name. That's why we use charts to identify money in, money out. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
The markets could come under pressure again today from geopolitical events and continued worries over China's economy after a choppy start to the year. Wall Street wavering back and forth on Tuesday amid more stable trading in global markets. The Dow and S&P 500 eking out gains, rising for the first time in 4 sessions. The Nasdaq closing slightly lower, posting its first 4-day losing streak since the end of September. Oil giving back early gains this morning.
Oh, my God. Don't they give you a headache? Welcome to Phil's Gang, coast to coast around the country, off the Wall Street Radio Network. Yes, we're down again. Isn't that great? 321 points. Another 321 points. Hope every day we just keep going down. I told you this. If you are a gang member, let me give you the number, 877-600-GANG. That's 877-600-GANG. You can call right now. Denise is waiting for your call. Steven's waiting for your call. They'll explain the $49.95. Very simple. I told my gang, you heard me on the radio numerous times back in May. I said we're going to short the stock market, and let's start. And we did that in May. We did it in May. We're still short today. You know, it's amazing what they're telling us. It's amazing what they're telling us why this market's going down. First, China. We wake up Monday morning, market's down 300 points, and they tell us the cause is China. Their PMI. Worst they've ever seen. 8 consecutive quarters. Their manufacturing, which is PMI measures the quality of your manufacturing, how strong your manufacturing is. 8 consecutive quarters down. They never seen that. Then they turn around and tell us that they don't say a thing. The market went down 450 points. Then it rallied back up at the end of the day, sliced off about 175 points off that 450. I guess we ended up around, we closed down negative 275 instead of 450. But they never reported that on December 31st we had our PMI, and our PMI report was much better. It was much worse than China. We should have went down. If we went down 450 on theirs, we should have went down another 450 on ours. We should have been down 1,000 points, but no. We went down 450, and at the end of the day, when we closed, we're only down 275. Nobody wants to talk about that. Now the next day, everything's fine again. Market rallies a little bit. This morning we wake up. Oh, China, Korea, North Korea. They set off a hydrogen bomb. That's why the market's down again. What are you, crazy? See, they don't want to talk about the real problems. Our Congress never wants to tell the people the real problem. What is wrong with this country? They won't tell you. Do you really think setting off a hydrogen bomb, taking a missile, going out in the middle of the ocean, get it up in the air, let it drop in the ocean, oh, that's what's dropped this market down 313 points? Are you nuts? Do you really believe that? Hey, we all believed we better do quantitative easing. We better keep interest rates low at zero for 3,460 days, or boy, things would be bad. We all believed that too, didn't we? The bigger problem is oil. Oil has dropped from $115 a barrel just off the 2008 low of $33.70. It hit $33.93. So it went from $115 down to $33.93. I'll give you the percentage in a minute. $115 down to $33.93. That is the problem. Oil. A 70% drop in oil. Oh, but what are we told about oil? Oh, it's good. Oil's going down. They tell us, oh, oil's going down. You know what Yellen never got, or Bernanke? Just like low interest rates. Low interest rates aren't good for the economy. Not when you keep them at zero for 3,460 days. How could you say keeping rates that low for that long is good for the economy? It's just the opposite. It hurts the economy. It's the same thing with oil prices. You tell how, oh, this is good. This is great. Remember Pritzker came out? Remember Pritzker? She came out and said this.
What I'm seeing is, first of all, lower oil prices.
Pritzker, by the way, is our Commerce Secretary. She bought a seat. She's from the Hyatt family. And she gave Obama, I forgot what it was, her and her family, something like $20 million when he was running. So she bought herself a seat at the big table. And she's the Commerce Secretary. Listen to what she says.
What I'm seeing is, first of all, lower oil prices is good for the consumer. Puts more money in the consumer's pocket.
Really? When she said that, she had no idea that how dated that statement was. That narrative was so dated. She had no idea. She didn't know what she was talking about. Now, she was right if you go back years ago, up to the years, let's say 2000, 2001, 2002. But after that, she was wrong. Low oil prices hurt the economy now, just the opposite. See, lower oil prices, lower oil means lower fuel prices. I understand. That means lower transport costs. I understand that. Cheaper airline tickets. I get that too. Benefits manufacturing. Hey, I get that. And then all these reductions of these costs are supposed to be passed on to the consumer. And because 70% of our economic GDP growth comes from consumers consuming, I understand. It's supposed to be a bonanza. Lower prices supposed to increase household spending, disposable income, especially big ticket items like durable goods, like screen TVs, all that. So yes, I understood all that, but that's before 2002, 2003. The rationale consumers will benefit because of low oil prices is because the world burns 34 billion barrels of oil a year. A $10 fall in the price of oil shifts $340 billion from oil producers to the consumer. Transfer of wealth. Thus, the $60 price decline since last August, you go back to last August, will redistribute more than $2 trillion annually to consumers. So that's going to be a bigger income boost than the combined U.S. and Chinese fiscal stimuluses they put in 2009. Remember our big stimulus? I understand that rationale. I understand that. But I'm sorry, it's wrong. It's wrong. See, the reason it didn't work this time is because, first, Obamacare, any benefits that you got out of saving gasoline or anything else you saved on because of oil went down, that was gone. You ate that up and more with Obamacare. The amount of premiums, the increases in premiums ate up any savings in oil. Plus, we lost it because of stagnant wages. Median incomes fell at 8%. We didn't gain anything. So, however, though, Pritzker was out of touch. Her statement was dated because after 2000, everything changed. Before early 2000, the United States would struggle to produce enough oil. Remember, we had to import most of our oil. Now, but new technology came around. Shale, new technology, allowed oil companies to draw oil and gas from shale deposits that were before you had the technology. It was over. That drilling hole was done. You couldn't take anything out of that hole. But with the new technology, now we could pull from those shale deposits, increase our oil supply by 43%, or 6.5 million barrels a day. So we reduced our dependency on that sandbox over those crazy people 27%. More when we get back. 15 past the hour. Join my gang right now. 877-600-GANG. You should be shorting like my gang is. But you're stuck buying.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Middle-class economics works.
Works? Where? Show me where it works. You tell us the unemployment rate is 5.1%, and you only get to 5.1% by making sure people don't have a job. Think of August. August, the unemployment rate went down to 5.1% because 200,000 people couldn't find a job. If they found a job, our unemployment rate would be at 10%. Isn't this amazing? Hi, I'm Phil Grande of philsgang.com. Aren't you sick of this stuff? Aren't you sick of these politicians? They keep lying to us. And you know, Wall Street does too. And how many times have you said, boy, I hate Wall Street. I hate the stock market. But that's the best place in the world to make money. But you need a lesson. You need a lesson on how to invest. That's where I come in. Join my gang, philsgang.com. It's the best teaching format in the country when you want to learn how to invest in stocks. philsgang.com.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know what I hate about these guys on TV, these smart guys? They think they're really intelligent. The same guys who never told us to get out of the dot-com before it crashed or the housing com before it crashed. Listen to what this guy says about Apple.
Why you hold Apple is because Apple is in the transition mode. We are now focusing away from smartphone unit growth, and we're focusing on the user base and monetizing the user base.
God, you want to scream listening to this stuff. What are you, nuts? Who cares about focusing away from smartphone unit growth and then focus on unit base and focus on monetizing user base? Who cares about that? It doesn't matter. What counts is you should have been out of the stock when it turned from green to red. You would have a profit of 20%. Instead, following this dope, you're losing money. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. You know, it used to be, hey, what's that hot stock? There's no hot stocks anymore. You know what it's all about now? Is identifying when to get in the market, when to get out. And why? Because the market is rigged. It's rigged to go up. There's nothing better. It's rigged to go up. It's called quantitative easing. Join my gang, philsgang.com. Have fun with us in a rigged market.
Go to philsgang.com or give us a call at 877-600-4264. At philsgang.com, we promote core technicals and chart analysis that enables each Philsgang member to be the best investor they can be. At philsgang.com, stock investing is defined in detail by the Philsgang standards. Working together, we achieve our goals and ultimately provide a truly unique profit-taking experience for our members. This is what philsgang.com does, and no one does it better than the off-the-Wall Street maverick, Phil Grande. For over 15 years, Phil coaches and teaches that stock investing diversity goes beyond fundamentals and stories. We believe that amazing things happen when people invest in themselves by following Phil's format and recommendations. At philsgang.com, we believe in the desire to embrace, build, and deliver on our core values and promises. And for over 15 years, Phil Grande has delivered on that promise. For more information, go to philsgang.com or give us a call at 877-600-GANG. That's 877-600-4264.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything's been taken care of.
We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
They just told us right away that we're going to house you, we're going to feed you, and every single one of his medical bills is just all taken care of.
Saber que el tratamiento es completamente gratis nos quita una preocupación de encima.
We have phenomenal research, outstanding clinical care, and the generosity of public, which allow us to treat patients regardless of what it takes. And that's what makes St. Jude so magical.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food, because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything's been taken care of.
We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
You're not a regular listener to Phil's Gang? What, are you nuts? Listen to Phil Grande and check out philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. Remember, we're here every day to help St. Jude. I ask you to join my gang, and we stay with the same 5 stocks all year. That's the key, the same 5 stocks. You get total control. The idea of the same 5 stocks, we also get the other side of the transaction where we short. See, that's the problem with your mutual funds. The mutual funds, they won't allow you to do individual stocks, and they won't allow you to short. That way, I mean, that's just one reason why that mutual fund, that 401k mutual fund you're in your retirement is horrible. You can't short, you can't do individual stocks, but the shorting is the big thing. But the real problem is the guy that's managing your 401k mutual fund, he is not paid on productivity. He's not paid on how much returns he gets for you. Well, you'll notice when on CNBC they will introduce a fund manager and they'll say, here is Joe Suckface of Fidelity Suckface Mutual Fund. $2 billion fund. Let's bring him in. Hey! What difference does it make if it's a $2 billion fund? What do I care about a $2 billion fund? Tell me what returns he got. I don't want to know how big the fund is. He said they won't give you the returns because mutual funds, 401k mutual funds, they can't ever even beat the S&P 500. They're terrible. The returns are horrible because they do not think when they get up in the morning, I'm going to go into the office, I'm going to get some good stocks here, I'm going to get a good return for my clients. They don't think about that. They go into their office, say the first thing they do is they pick up the phone to the sales manager. How much money have we taken in during our asset collection? Have the salespeople brought more money in? Because he gets paid, the fund manager gets paid not on returns, not on performance, but how big your fund is. And he sends out these salespeople. You met them. They're in your town. They're called brokers. They're not brokers. Yes, they're brokers. They make you a broker. But their idea is to come out and get your money, put it in the fund. If it's $1 million fund and a $5 million fund and it keeps growing, you keep paying more fees based on the size of that fund to your money manager who you've never met through your broker. And it's the idea of the broker befriending you, becoming your pal, go golf with you, go to dinner with you, he's your best buddy. It's his job to do asset collection. That's what it's called in this industry, asset collection. Take money from your pocket, move it over to the fund. The bigger the fund grows, everybody makes money except you. The 401k mutual fund is a ruse. It should be illegal. So you can't make money because you can't short. When the market's going down 300 points, you can't make money. Isn't that ridiculous? Isn't that ridiculous? Even Kramer, who of all people, he must have found God for 10 minutes, the most disgusting human being on earth, he even rallied against these mutual funds. Listen,
First, you need to understand the problem with the mutual.
Wait a minute, I got to put my gas mask on. Okay.
First, you need to understand the problem with the mutual fund model. My main beef here is that with actively managed mutual funds where there are people deciding which stocks or other securities to buy and sell, we've got some problems. Unlike hedge funds, mutual fund managers don't get paid for delivering performance. They collect fees from their investors, people like you, and the amount of money they make depends entirely on the size of their assets under management.
See? Then he goes on and on, but I don't have enough gas to put my mask on for the amount of time he runs his mouth. But he's right. And I've been saying that how long? But I'm only one little guy. I'm only one little guy, and I've been telling you got to short a stock. Here, I'll give you an example. The oil industry, the biggest problem we got, why the market is going down, it's certainly not because North Korea launched the bomb. What are you, nuts? You really think we're down 300 points because of that? Not at all. We're down because our economy stinks. Company earnings stink. Companies aren't making money because people don't have money to spend because they have lousy jobs. When they can't spend, companies don't make money. Now, oil is the biggest problem. Oil is the biggest problem. Because, see, what Pritzker said was about, hey, the lower the oil, lower gas prices, the better. Everybody's going to benefit. Well, that's not true. Even if they were going to benefit, it was wiped out because of the cost of health care. But they're not going to benefit because here's the problem. When we went to shale deposits, we increased our oil supply by 43% or 6.5 million barrels a day that we never could get that oil out. Our dependency on imported oil dropped big time by 27%. But here's the problem. With all these shale deposits, that's been a strong growth of our jobs. Because, see, the hydraulic, these fractured wells, they have a short production life. So they're always drilling new deposits. That requires big investment. Big investment. And investment dries up when oil prices drop. Earnings of companies are down so big now. Nobody's investing in the fracking, and we're laying thousands and thousands of people off. More than 200,000 workers in the oil fields fracking alone. That is not the multiplier effect. You have the multiplier effect. Every time you hire somebody in the oil field and on one of these rigs, remember you're hiring another 10 people in the economy. The baker in town, the hotels, all the other jobs that come along with it. You have all kinds. It's called the multiplier effect. So the big problem we got now is we have so much oil, prices are going down. Investors aren't investing. People are getting laid off everywhere, and that's why the economy's going down. And that's why, just like when they told us with low interest rates. Remember they said low interest rates were a good thing? What are you, stupid? They always told us low interest rates are good. To hold interest rates at zero for 3,460 days, we were told was good. We were told quantitative easing was good. We were told that bailing out banks were good. Because if we didn't do something, something else would happen. Something worse would happen. It was a lie. If we raised rates, our growth would stop. Oh, really? Where's our growth now? See, but what Bernanke and Yellen didn't get, because they're educators, not business people, low rates held back the economy for 3,460 days. We'll explain when we get back and take a look at some fracking.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Middle-class economics works.
Works? Where? Show me where it works. You tell us the unemployment rate is 5.1%, and you only get to 5.1% by making sure people don't have a job. Think of August. August, the unemployment rate went down to 5.1% because 200,000 people couldn't find a job. If they found a job, our unemployment rate would be at 10%. Isn't this amazing? Hi, I'm Phil Grande of philsgang.com. Aren't you sick of this stuff? Aren't you sick of these politicians? They keep lying to us. Wall Street does too. And how many times have you said, boy, I hate Wall Street. I hate the stock market. But that's the best place in the world to make money. But you need a lesson. You need a lesson on how to invest. That's where I come in. Join my gang, philsgang.com. It's the best teaching format in the country when you want to learn how to invest in stocks. philsgang.com.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264.
Hi, I'm Phil Grande of philsgang.com. You know, we're told every day that the stock market is a good place to invest. And it is, if you know what you're doing. The last thing you do is take money and invest it with a planner, a money manager, put it in a 401k. It can't grow because the fees kill you. They really do. Join my gang, philsgang.com, and then you take control of your own retirement. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Do you think gold is money?
No. Gold's not money? You got to be kidding. That's Ron Paul asking Ben Bernanke. And of course, Ben Bernanke lied. Of course, gold is money. But here's what he doesn't want you to know. They've been suppressing gold, trying to push gold down because it competes with the dollar. The Federal Reserve doesn't sell gold. They sell dollars. Gold competes. Gold will dictate in a free market where interest rates should be. That's the last thing they want, because they manipulate interest rates. Now, has your broker told you that? Has your planner told you that? No. Well, I told my gang that. I explained it to them, and we positioned ourselves to be in a perfect position for gold and copper as it dropped. That's why you want to join my gang, Phil's Gang. We're right on top of this. philsgang.com. Join today. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. There is only one talk show host, Phil Grande, who delivers both social and financial talk. Not even Hannity or Rush can deliver a 1-2 punch like that. That's Phil Grande, philsgang.com. Phil Grande is unique, the industry leader, the first talk show host ever to combine social issues and finance into winning stock market ideas. That's Phil Grande, philsgang.com. That's philsgang.com.
They just told us right away that we're going to house you, we're going to feed you, and every single one of his medical bills is just all taken care of.
Saber que el tratamiento es completamente gratis nos quita una preocupación de encima.
We have phenomenal research, outstanding clinical care, and the generosity of public, which allow us to treat patients regardless of what it takes. And that's what makes St. Jude so magical.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food, because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything's been taken care of.
We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
What is Phil's Gang? philsgang.com is a subscription website service that host Phil Grande has been teaching and providing daily stock investment recommendations for over 15 years, all in the name of making its customers educated investors and helping the kids at St. Jude's Children's Hospital. If you want to take charge of your financial future, then do not wait any longer. For only $49.95, become a Phil's Gang member today. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. Welcome back to the Phil's Gang Show. This segment is brought to you by philsgang.com.
And welcome back to Phil's Gang. Let me give you a number, Denise. I'll pick up your call, and so will Stephen. 877-600-GANG. That's 877-600-GANG. Join the gang. Let me help you So you get the other side of the transaction. It's ridiculous. As these markets keep dropping, you're not making money on the other side. How are you going to make money fast enough to retire when you're only getting one side of the transaction? It's ridiculous. It's ridiculous. They don't give you the other side of the transaction, especially in your 401k, because they're shorting you to make money. 401ks are a disaster. The 401k, the guy who's managing it is not looking out for your interest. He's looking out for his own interest. It's always based on the size of the fund. That's how he ggets paid, on the size of the fund. He doesn't get paid on his productivity, not on his performance. The fund could be losing money, and he still gets paid because it's on how much money comes in. The salesmen, the brokers go out and get your money, and they bring it, put in that fund, and the fund keeps going up and up. He hasn't got to do a thing. And he's in there stealing your money, 28 hidden fees, 160, think about this, 168 million a day they rip from you with trading. We talked about that yesterday. You should set up your own retirement. I'm not saying just dump your 401k right now. I'm not saying that's not practical, I understand. But why don't you try setting up your own your own retirement? Why don't you just do an index? Just do an S&P index. It's SPY. You can buy, a share of the SPY. Almost rates are nothing. You get the 500 best stocks in the world. There's hardly any cost to it all. Join the gang, and we follow that for you. And you buy when you're supposed to buy it, and you sell short when it goes down. Here, let me give you an example. Let's take one of our 6 stocks, Schlumberger, and oil alone. If you take Schlumberger, our oil stock, on November 9th, we shorted it. It's right now down 15%. But here is even better. Let's take some of the shale companies because they're not getting investment money. Shale, let's take MRO. So if that was one of your 5 stocks, Marathon Oil, do you know what your return would be right now in shorting? If you had your own retirement fund you set up where you could do individual stocks or just do, as I said, the spiders, an index fund. The S&P has 500 companies in it, has hardly any cost, no expense, very little expense. But if you take MRO, you would have sold that short when it turned from green to red. On the 27th of November, it's now down 38%. 38% is still red. I'll give you another one. CLR, another fracking, another company involved, Continental Resources, heavy in fracking. And right now, that's what's killing us. Because now, everybody was right before. When oil prices went down, everybody benefited. But now it doesn't work anymore. Because now the damage, when oil prices go down, there's no more investment. And now the oil, 40% of our labor in this country comes from that oil patch. 200,000 people just got laid off. Nobody's investing in oil. And you got to invest. That's the thing with fracking is you got to keep opening up these new wells or these old wells. Keep opening up and you go down and you frack. It costs a lot of money. But investors aren't investing anymore. So now CLR, Continental Resources, if it turned from green to red on December 12th. December 12th. It's now down 44%. Cut in half. Say I'm lying to you. Cut in half, 22%. Cut it again. Cut in half again, 10%. What would be wrong with getting a 10% return when it went down short? You've got to change the way you think. Again, it's just like low interest rates. Everybody said, boy, that's great, low interest rates. We're really going to get this economy moving. We never got the economy moving. We've been at a growth rate of less than 2% for 9 years. So you really think you're going to make money staying in a 401k mutual fund that somebody is in charge of your money who is not tied to performance? He's only tied to how much the fund is, how big the fund is? Whoever thought of anything like that? Are you kidding me? Would you hire somebody like that? Well, you did. 80 million of you did. Who would hire somebody that says, Well, you're not going to be paid on performance. We're not going to pay your house. I'm going to paint your house, but it's not going to be. You're going to pay me not how much I got, not how much I painted the house, how much cover I put on your house, but just on how much paint there is. The more paint you bring me, the more gallons you pay me more to paint your house, but I don't have to paint it. I don't have to perform. So you bring me 10 gallons, and you're going to pay me $20 an hour. Now you bring me 20 new gallons, and you're going to pay me another $20 an hour. And I'll get $40 an hour, but I don't have to paint the house. You say, wait a minute, what's going on? You say, well, no, I get paid based on how much paint you bring me. I don't get paid on how much area of the house I paint. I don't get paid on performance. You'd kick them out, wouldn't you? But why is it with your retirement money? Say, oh, no, stay here. This is a good idea. I never heard anything so good as this. This is great. Once they got rid of the pension fund, you were dead. The 401k mutual fund is a scam. It's a fraud. Even a guy that's a fraud, Kramer, if anybody's going to recognize a fraud, is another fraud, Kramer, and he recognizes it. $168 million a day they steal from you just in trading fees, and you can't find them anywhere. Why? Because they hide in net asset value. Now let's take and go back to what's going on and why this market is going to collapse when they say it's not going to. As I said, the low interest rates were a killer. See, we were told if we raised the rates, our growth of 2% would stop. Wow, that'd be terrible. See, what Bernanke and Yellen didn't get, because they're educators, they're not business people, that low rates would hold back the economy, not help it recover. Low interest rates encourage people to borrow money to invest in things they shouldn't be investing in. Not good investments, number one. Then you have the biggest buyers of shares in U.S. market have been non-real investors, but companies buying back their own shares with cheap money. They borrowed $5 trillion to buy back their own shares. They're not investors. They got to pay that debt back. Low rates encourage hedge funds to borrow $2 trillion, starting in 2012, that they otherwise would have never borrowed. And it created a humongous fake market, a big stock bubble. Now you add the $2 trillion to all the other corporate debt out there, and it's doubled. It's going from 26% corporate debt to 56% of our GDP. Then on top of that, we got $19 trillion in national debt, plus another $126 trillion in debt. All of this borrowing because of low rates. So tell me low rates are good? Just like too much oil. You know, we got too good at fracking. The fracking was so good, so successful, we were producing so much oil. Now 200,000 jobs gone. And we can't get investors. Matter of fact, fracking's to the point now it's not even worth it's not worth fracking anymore. Economically, it's not worth fracking. So what I want to do is be able to go to a stock. Let's give you another one, like SWN. SWN. Now, SWN turned from green to red at $28. Is now trading at $6. It went from $28 to $6. It went from green to red. That's 78%. That's a 78% drop. Yeah, that means if you were shorting, that's a 78% return since May. It turned from green to red. Join right now. 877-600 gang. Try it at least.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Generally agree that monetary policy was not the main reason for the housing bubble.
What are you, nuts? Of course monetary policy was the reason for the housing bubble. That's Ben Bernanke. Hi, I'm Phil Grande, philsgang.com. He's lying. Listen to this. In December 2000, interest rates were 6.5%. Within the next 30 months, Bernanke dropped them down to 1%. Because of that, mortgage originations grew from $1.5 trillion to $5 trillion. That was by the end of 2003. The housing bubble was inflated, and it was continued being fueled by his policies, which eventually we saw mortgages that grew from 28 trillion mortgages to 50 trillion. He lied. But here's the important thing. We were able to take advantage of that here at Phil's Gang, and we were able to make money because of it. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. I'm here to help you. I'm tired, and you should be tired, of listening to these financial shows like CNBC where they're all geniuses and they're always wrong. Look, stop worrying about the price to book and the price to sales and all the stuff they tell you think you need to know. You don't need to know any of that. Anybody can make money in the stock market using charts. It's about money flow. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know what I hate about these guys on TV, these smart guys? They think they're really intelligent. The same guys who never told us to get out of the dot-com before it crashed or the housing com before it crashed. Listen to what this guy says about Apple.
Why you hold Apple is because Apple is in the transition mode. We are now focusing away from smartphone unit growth, and we're focusing on the user base and monetizing the user base.
God, you want to scream listening to this stuff. What are you, nuts? Who cares about focusing away from smartphone unit growth and then focus on unit base and focus on monetizing user base? Who cares about that? It doesn't matter. What counts is you should have been out of the stock when it turned from green to red. You would have a profit of 20%. Instead, following this dope, you're losing money. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande of philsgang.com. You know, everybody, the hot stock's Apple or Google, whatever it is. It doesn't matter. What people don't understand is every stock is the same. If the institutions buy it, it goes up. If they don't, it goes down. It doesn't matter the name. That's why we use charts to identify money in, money out. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, my name is Phil Grande at philsgang.com. You know we're going to have not only a stock market crash in 2016, but a housing crash in 2016. Don't you like how they tell us the housing's in recovery and the market's in recovery and the economy's in recovery when it's not? It's in a bubble. Take housing. They loaned to a Wall Street firm called Blackstone. $7 billion. They buy 41,000 houses to go rent. Are you nuts? When they can't collect the rents anymore, those houses are going on the market and going to depress the real estate business by 30 or 40%. It's the same thing with stocks. They loan people money 600% more than they ever did before to buy stocks. That's all debt. And when the market goes down, they're going to have to dump those stocks to pay back that debt. And boy, will the market drop. Join my gang. Learn how to short. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. Listen to Phil Grande and check out philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. Go to my homepage. I think I have one of the best explanations why the market will crash. It's so simple, so easy. Okay, I'm not using $1 million words. Very simple. Why the market's going to crash. Why it's going to crash. It's right on my homepage. Go to philsgang.com. It's free. And also, why don't you think about this again? If this doesn't make sense to you, I don't know what will. If you brought your car to get fixed, and the mechanic says, you ask me how much it's going to charge me. He said, well, $20 an hour unless I get more cars in the yard to fix. And he said, well, what do you mean? Well, the way I get paid, I don't get paid fixing your car. I get paid not on performance. I get paid on how many people bring their car here. The more cars that are waiting to get fixed, the more I charge you as a fee. You'd say, what? Wait a minute, let me get this. You want to bring my car in, I already see you got 200 cars here. You haven't fixed any of them? No, I don't get paid fixing a car. I get paid on how many cars are in the lot. The more cars I have, the more my fees go up. Wouldn't you get in your car and leave? But why don't you do that with a mutual fund, a 401k? You stay in. You say, oh, that sounds good to me. What happened to your brain? What is the difference? 401k. You do like 2% a year for investment costs, then pay a quarter of what's left to Uncle Sam. You lose another 2% to inflation. You're left with 1% a year. It'll take you 70 years to double your money if you're lucky. Then they take, and here's the unbelievable thing about mutual funds. They will not let you trade and invest in an individual stock. And worse, when a stock, instead of going up, goes down, why on earth? Let's think of this. Let's say you bought SWN. Let's say it was in your portfolio, in your 401k mutual fund. And it was going up from $22, and then it went from $22 up to $29. So let's say 22 to 30. 22 to 30. So that's probably about a 36%. You're happy. Now all of a sudden the market goes down. And they're going to say, and you think he's going to get you out of that and lock that profit in? No. That mutual fund managers don't take this stock out. They leave you in. Say, and what do they tell you? What's the question you always ask? Hey, what do you think we should do? What do you think we should do? And what's he going to say?
You're fine. You don't pay attention to the value of your house every day. Don't pay attention to your portfolio.
Yeah, don't pay attention. You're fine. So now it went up 30%, but now it came down from $28 down to $5. So that's about another, what's that, 40, that's 70%? 80. So you were up 30%. Now you're down. You gave back to 30. You gave back 30 and you're down another, what, 60%? Or 50%, I guess. But that's why you can't make money in a mutual fund. Who on earth is going to convince you? How do they convince you to do that? Well, they convinced 80 million people that this is good. This is how you invest. 80 million people. $41 trillion. You can't buy an individual stock, and when the market goes down, you're not permitted to make money on the way down. Do you think all those guys on Wall Street, for heaven's sakes, you think all those guys on Wall Street, they're not permitted to make money on the way down? You think Kramer made his money sitting there trying to pick the best stock that's going up? That's why I have to laugh. He's such a hypocrite. He sits there on the show every night, always giving somebody a hot stock. That's not how he made his money. All those guys you see make their money, the big hedge fund guys make their money shorting. Why? Because the stock goes down 10 times faster than it goes up. If you don't start right now and just say, I'm going to try this, and I'm going to start out following Phil. I'm going to follow his 5 stocks, and I'm going to do exactly what he does with those 5 stocks. And when he says short them, I'm going to short them. Then I bet you I convince you. You do that for a month, you're going to say, I don't understand. I'm not making any money in my 401k. Whatever money you made, by the way, you're going to give it all back. Because they don't. Do you ever get a call from your 401k saying, we're up 30% now, we're going to get out? You ever heard that? No. Matter of fact, every time you try to get out, they tell you, oh, you got to buy more. I got a better one for you. The best thing to do, if you don't have time, see, know why so many people, 80 million people are in 401ks? Because they don't have time. They don't know what to do. And people are so easy. I mean, to fool people in these 401ks, it's so easy because people think, oh, this is great. I'm going to give money. I get a match from my employer. I don't have to do a thing. And I'm going to make all this money. I'm going to retire and I'm going to be happy. You're not going to retire. You're not going to be happy. You're not going to retire on a 401k. You can't. It's impossible. So you're going to learn after you do this for a month, you're going to say, he's right. I'm better off just taking an index. Just take the S&P, that's a basket of 500 stocks, And when it's red, I'll sell it short. When Phil says sell it short, I'll sell it short. And when he says it's green to go along, I'll look on my chart. When it turns green, I'll buy more. If it turns red, I'll sell more. It's just nuts. It's just nuts. By the way, it was interesting last night. Did you hear this interview on Kelly last night? I forget her show's name, Kelly something or other. But they had the three guys that are going to be in the movie that's coming out this weekend. Benghazi. It's really going to show Hillary Clinton is a liar. And listen to one of the guys answer to what Kelly asked.
It's a video. It was all about a video. And we've heard the family say that, and that's how we kicked off the segment. That Hillary Clinton, according to the family members, looked at them at Dover Air Force Base when the bodies came back in the caskets and said, we're going to get the guy who made that video. And now when asked who's lying, you or the families, she says, well, it's not me. And of course she's talking about Glenn's family. She's talking about Tyrone's family. She's talking about Sean's family.
And I know Pat Smith. I know Katie Quigley, Glenn's sister. I know, we know Ty's mom. We know what they told us was said, and I do know them very well. And Katie's been on the news quite a bit, telling you what she was told, and I know that they were told this video because that's what they told me. Well, and I believe Pat. I believe Katie. I believe Charles Woods.
I mean, who would have a reason to lie?
Why? Their loved ones just died.
Simple.
Exactly.
They have no reason to tell anything but the truth.
When you saw.
It's sad. Now, these are the guys who were there. This is the guy who was right there, and he had his two buddies with him. These are the guys that were in that firefight. They were there. Why would they lie? So I hope this really puts a light on it and get people to believe it. But you know what's amazing, isn't it? The cornerstone to this whole administration is lying. Is lying, is fraud. And that's the problem you got with the stock market. There's nothing wrong with the stock market. It's the people. It's the people who run the market. If you really truly believe you're going to just take money and put it in the market, give it to somebody, and you're going to make a nice return, you're going to be fine, you're nuts. We have today a fake economic GDP growth. We have fake money. I mean, my God, think about gold. Remember this clip?
When you wake up in the morning, do you care about the price of gold?
Well, I pay attention to the price of gold, but I think it reflects a lot of things. It reflects global uncertainties. I think the reason people hold gold is as a protection against what we call tail.
All right, I'm running out of time. He asked, is gold money? He says, no, gold's not money. Gold's not money? Well, wait a minute. All those hundreds of years that they were using gold coins, thousands of years, wasn't that money? Sure, it was money. The reason they want to get rid of the gold, the Federal Reserve wanted to get rid of the gold, and they reduced it from 25,000 ton down to 8,000 ton, and then they replaced it with paper, is because with gold you were limited. For every dollar they printed under the gold standard, they had to have $1 of gold. They couldn't go and spend. Congress couldn't spend $1 trillion more a month than they take in. That's what's getting us into all this debt. We wouldn't have $216 trillion in unfunded debt, $19 trillion in funded debt. We wouldn't have that if we were on the gold standard. Not money? No, not money. All right, it's money. Just they didn't want gold. They wanted dollars so they could just keep printing forever. Join my gang right now, 877-600-GANG.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to make my dreams.
Middle class